Hi, it's Brian Decker with your Market Minute. I've got a lot of information for this segment, so I'm going to be looking at some notes. Just want to give you a heads up. Today was a key day. The Fed made a statement about the Fed pivot, markets took off. I want to give you some background though. There have been only 5 years in the last 100 years where a 60-40, 60% equity, 40% bond portfolio has lost more than 15% on a real return net of inflation. Those dates, 1974, the loss was 24.1%. 1937, 22.8. 1931, 19.9%. 1946, 18.6. 1941, 16.8%. And then we showed that the average return for the S&P 12 months after a 60-40 loss for these years with dividends reinvested, the average return was a positive 15.6%. And the average 2-year return was 36.6%. These are rebounds. I wonder what's going to start this one. Well, rebounds started with Fed easing. So rebounds in 1942 and 1943 were especially strong, and 1975. Those were 50.9% in 1942 and 3, and in 1975 and 6, 68.6%. The tone of the market changed when Jerome Powell, our Fed chairman, gave a speech today. This is Thursday after the market closed. The key words were this, quote, monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, here's the key. It makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Markets took off, up over 700 points today. So that market rally caused the dollar to go down, caused bonds to go down, caused gold and silver to go up, and across the board rally with all sectors of the market going up with big volume today. Is there follow through? Well, there's a tug of war now between this new information from the Fed, which we call the Fed pivot, and also the actual economic information that's coming in showing the PMI, the Chicago PMI, that number was 37.2, was particularly ugly. Anything under 50 is contracting, a contracting economy. Manufacturing is struggling. The economic numbers are showing that we'll have a recession. Will we? Now we don't know, because now the Fed is showing signs of loosening or slowing down their Fed rate hikes instead of going on an aggressive way. So we'll see if there's follow through in this market. This is Brian Decker. Hope you have a great rest of your week.